You need a $25,000 or more to scalp realistically. You're absolutely correct. What you're referring to is the pattern day trader rule, or PDT rule, established by the SEC. And matter of fact, it's correct for the retail trader, it's not correct for the professional trader, because the professional trader doesn't have that PDT rule. The PDT rule, if you're not familiar with it, it says that you cannot take more than 3 day trades in 1 week or 5 days period. Uh, this is it. Three is your limit, and day trades, they consider that is you open and close a position in the same exact day between 9:30 in the morning to 4 p.m. Eastern Standard Time. And they do that to protect retail traders from blowing up their account and kind of slow things down for them. On the opposite side, a professional trader with a license from FINRA does not have that rule. So I've had $10,000 on my account, and I was taking trades every day, as many as I want, because the proprietary trader is actually leveraged, or the company's leveraging him, sometimes 100 to 1. You can start with 20 to 1, and then it goes all the way to 100 to 1. What does it mean? Which means if I put $10,000 in my account, only $10,000, I'm actually trading a $1 million account. Of course, I have to be very careful not to lose the $10,000, because as soon as you come down to $1,000 in the account, it will ring all kind of bills at the risk manager, and they will liquidate your position without even asking you or calling you. So PDT applies only to retail traders. And I 100% agree with you. You cannot really make any money with $25,000. Sometimes you get lucky with options and futures, and you make money, but to make consistent money, the money that you can depend on to pay your rent, your mortgage, your car payment, your food, $25,000 is a little too, not a lot of money in the day trading business. So be careful. What platform y'all recommend to start paper trading? If you're new to this game, there's tons of paper trading platforms. A lot of them free, and some of them, of course, is paid services. But the best free one for a new day trader, I would say Interactive Brokers. Interactive Brokers have a very good demo trading, paper trading platform, or you call it simulator. You might end up paying a few dollars for data if you want the up to date, like the latest, the live data instead of the delayed data. But is the cheapest in any other platform, and it's the best. It's the closest one. Now, if you're really trying to take your trading to a professional level and you're trying to get a license, then there's a platform called Fusion, but you do have to pay for it, and it's not cheap. It's maybe $200-300 a month to get live data. So, and it's not available for retail traders. It's only available for proprietary traders. So you have to sign up with a company to give you access. So Interactive Brokers, or IBKR, interactivebrokers.com, will get you there. Day trading is a pseudoscience. 90% of day traders lose money. You are absolutely correct in the 90% of day traders lose money. I don't agree with you that it's a pseudoscience. It's just like any other profession on this planet. Almost 90% of any other profession or any other hobby or any other thing, they fail. Anybody that started playing football or soccer or tennis, it has a very limited success rate. And that's what makes the day trading actually makes money, because the 10% is pulling money from the 90%, which makes it profitable business. Now, if you look at anything, anybody wanted to go be a doctor, right? Only 10% of the people that they dreaming of being doctors actually became doctors, or football players, or anything else. There's almost 90% failure rate in almost every profession on this planet. So is it a pseudoscience? No, it's not. But I can tell you this, I can agree with you, it is not easy. I have lost so much money before I became profitable. I have blew up so many different accounts before I started seeing consistent profits. So yes, it's sometimes, I'm one of the guys that guilty that actually called it a gamble. I called it a scam. I called it pseudoscience. I called it a lot of other things. And I took so many breaks and I came back to it until I realized what I was doing wrong and I stopped doing that. And every time I notice I'm doing one thing wrong, I stop doing it. Over time, it builds up. Your skill builds up, and suddenly you will see everything sitting together, getting together in a way that will make you profitable on the long run. Problem is my stop loss almost always gets hit. That's because the stop loss is way too close to your entry point. If it gets hit more often than not, then you are very tight. And sometimes that's a good thing, of course, if you like to, if your risk tolerance is way too low and you don't want to experience that pain of seeing the trade going against you, that's a good thing. But if it's getting hit more than often, it's too tight. Try to increase it a little bit more, because once you increase it, it will give you more room for error. You are not expecting the market. Nobody buys at the bottom like most people think. Nobody buys, sells at the top either. You have to, you have to understand. You have to give yourself some room for some, for the market to move against you before it makes a move in your favor. If your analysis is correct, it's going to move in your favor, but you never know how far down it's going to go. So increase your risk stop a little bit. Try to be comfortable with more risk stop and with more risk. But in the same time, if you take it all the way down and it never gets hit, and you take in a lot of losses that you cannot really, you cannot accept, then it's too wide. So just be like, you have to set your stop loss in a comfortable position where you're not too upset about the loss if it gets hit. But in the same time, not every single trade your stop loss gets hit, because now you're not making any money. You just getting killed by paper cuts one after another. So give yourself some room for the trade to move against you first before it moves in your favor. I will get rich day trading if I put all my faith in the Lord. Man, this is awesome. This is awesome. Somebody to have faith that he's going to do something, he's definitely going to get it done. I'm a man of faith myself, and I really appreciate bringing that to the day trading. I have never actually heard of that. But also, I can caution you, faith is not enough. Let me tell you a story. I think I heard it from a church, actually. There was a priest and another man went to see a boxing game. And as they sitting down to watch the boxing game, one of the boxers comes and just, does the cross on his body. And the man turned to the priest and he said, "What does this mean?" So the priest responded and he said, "Not a damn thing if the man doesn't know how to fight." So it's great that you actually believe faith will get you there. But honestly, your skill, your knowledge, working on yourself, your discipline, your consistency is what's going to get you there. So have faith that you're going to actually follow your plan, and then you will get there. But just blind faith in somehow the trade is going to work in your favor just because you have faith, it doesn't work this way. I hope it does. And if it does for you, let me know, because I can tell you it never worked for me. Sometimes I actually, in the front of a losing trade, I'm actually praying. I used to pray in the front of a losing trade because I could not handle seeing 6 digits gets wiped off my account. And I would literally sit there and pray that will turn around. Consistency is a bloody nightmare in this game, in day trading. I couldn't agree with you more. It's been the hardest part for me, especially after winning days. In my early days, as I'm learning and I'm blowing up accounts and I'm losing money like crazy, one of the very first things I've noticed about myself is I can follow my trading plan in my losing days. But if I go for, like, let's say a profit target of, let's say $500, and I end up with $1,000 for that day, then my trading plan goes out of the door. Now I'm like all over the place. The euphoria hits hard and consistency is out of the door. And I tend to take a lot more risk higher on trades that I would never take according to my day trading plan. So yes, I agree with you. Consistency is a nightmare, and to get that consistency, you have to really work hard on yourself. And it's different for everyone. If you're the kind of guy who are actually successful in life, like lawyers, police officers, doctors, pharmacists, and stuff, they usually make the worst day traders because they cannot accept the fact that they were wrong. They got used to the fact that they can manipulate the environment around them to make money or to get what they want. And when they bring that kind of mindset into the trading arena, it doesn't work unless you move billions of dollars and you can affect the stock price. You are there just for the ride. You have to flow. You have to go with the flow. So yes, consistency was my biggest problem for a long, long time, and a lot of people wouldn't want to admit that. So I'm really grateful that somebody said it. Film paper trade or demo for too long. Emotions and decision making is very different when it's real money. I 100% agree with you. 1000% agree with you. I have known a lot of people, they start all of these challenges with paper accounts or demo accounts or simulator, and they do great, awesome. They follow the rules and everything else. And as soon as they go live or they start trading their own money, live account, everything goes to hell because now they really feel the anxiety of losing money or the euphoria of the profits, which turns everything else upside down. So yes, that's awesome point. Great point. Yes. Use the demo account, the paper account, or the simulator to your advantage and back test everything, every strategy before of course you put your money at risk. But in the same time, remember, you learn about yourself from trading. You learn about your greed. You learn about your patience. You learn about your discipline. And you have to work on all of these stuff. And you wouldn't work if you didn't feel like you don't have a skin in the game. Real money makes a good trader. Trading real money makes a good trader. Start small, learn, and continue to grow. Why people use stop loss? If the price went down, then just hold. If you day trade in established companies like Nvidia or S&P 500, it will grow back eventually. That wouldn't be a day trade because a lot of time the stock would go in the red during the day and will never come back up before the end of the day. You're referring to investment. Investment is for sure you buy and hold, and eventually it will go back up. I mean, based on the last 100 years stock market, the stock market has been uptrending. Sometimes it's downtrending like COVID time, for a day, for a week, for a month. But I have not seen one full 12-month period where the stock was downtrending for 12 months. Usually downtrend for about 3-4 months, just like COVID time. But this is not day trading. Day trading, you can start your day in the green and end up in the red. So if you're holding, how much are you holding for? Are you holding for a week? Are you holding for a month? Are you holding for 3 days? Then that's a swing trade. It's not day trading. So yes, even if you trade in established companies like Nvidia, Apple, Microsoft, S&P 500, NASDAQ, a lot of times you have red days. So yeah, that's why you have the stop loss. Remember, day traders usually use leverage. If you're a proprietary day trader, you could leverage up to 100 to 1. 100 to 1. So for every dollar in your account, you're trading $100. So for let's say you have $10,000, you're trading $1 million account. So you're very leveraged up. So you cannot just hold and forget about it because it's going to wipe your $10,000 and a lot more. So yes, stop loss in day trading is the most important part and the hardest part for people to learn actually. But it's a great point. I really appreciate you brought this point up. Thank you. Scalping is great, but you need to manage your risk well, and you need to understand lower time frame structure deeply. You're absolutely correct. Absolutely correct. Scalping is great, but it's not easy. It's one of the hardest trading that you can ever do. And here is why. Think of it just like driving a car. Investment is a slow motion thing. Scalping is a very fast moving because you're using the 2 minute time frame, the 5 minute time frame, the maximum, either the 2 or the 5, which means moves can move very quickly, a lot faster than you. So think of it as driving a car. If you're driving a car, right, you want to learn on something slow. You want to learn on a car that would not run away from you. Now, if you take a new driver and put him in a race car, most likely he's going to crash because the car is way too fast for his reaction time. Scalping is too fast for the new beginning trader reaction time because he's trying to think about what to do next and he can't keep up with the market. The market is just moving way too fast. He's probably over leveraged. He sees probably big losses that makes him paralyzed and freeze, or he sees big gains. Same thing, he freezes and he doesn't know. He gets greedy and bam, it turns on him and it goes way in the red. So yes, scalping is great, but lower time frame structure is not an easy one to understand. Matter of fact, you have to put a lot more time into charting the 2 minute and the 5 minute time frame. So I really appreciate that point. Thank you. I changed from day trader to a swing trader a long time ago, and let's say I'm getting way larger gains. You're absolutely correct. Swing trades have much larger gains than day trading and scalping, but on the opposite side of that coin, it also have much bigger losses than scalping and day trading. Here is why. The game is the same between swing trading and day trading. It's the same. In scalping, you might say, I'm willing to lose $100 to make $500 in profits. In swing trading, you probably say, okay, I'm willing to lose $1,000 in hopes to make $5,000. And the game it just comes down to numbers. What's your risk tolerance? How much are you willing to lose before you start losing sleep and think this game is rigged or it's a scam or it's a gamble? But yes, I 100% agree with you. I do both. I do day trading and I do swing trading. Day trading for me is like an ATM machine that brings me just a few $100s a day. Just like ATM machine doesn't give you more than, let's say, $500 a day. That's how I treat it. Swing trading on the other side is more like an investment or a bank account where you actually can go to the bank and pull more money if you want to. So, good point.